Hi, welcome to the Market Alert for Tuesday, the 4th of October 2022. So stocks, bonds and silver are soaring. Just to ignore the European financial system collapse that's going on in the background. US stocks begin quarter four with a rally amid softer dollar and yields. And again, stocks and bonds rally as aggressive Fed hike bets pair after soft data. So the economic data was a bit softer yesterday, again indicating that the Fed may pivot. So markets are betting on a Fed pivot again. Stocks are soaring and bond yields are plummeting as traders dial back expectations for Fed tightening. Again, betting on a rate cut arriving as soon as May 2023. They risk being disappointed too, right? They will. As we head into winter with gas prices, etc. Main news today is going to be the JOLTS opening. That's going to be the big one. That's at 3 p.m. There is some other news in between this and at 2 and 2:15. Williams and Mester will be speaking as well. Lagarde's out at 4 p.m. as well, and Jefferson at 4:45. There's a lot of central bankers out in the last week, isn't there? That are trying to support the market with rhetoric. That's the case, doing what they can. Gold-silver ratio, well, look at this. Yesterday we saw this plummet as the silver price was allowed to actually move to the upside on the pivot, as the dollar didn't really drop that much, but it certainly was enough to ignite the metals market. Silver in particular moving up, I think it was just under 10% of a move yesterday. But before we get to that, let's have a look at the Dow. So yesterday, the Dow moving to the upside, as was suggested in the market alert. We're oversold, we need a bit of a bounce. These are the upside targets, and the market seems to have that consensus as well as they wait for the next round of CPI and non-farm payrolls. And also quarter four earnings. You can see the market trading up to the 50% retracement, which is also where the last green bar we had the high of it. And the market fell for 2 days after this. So in order to move higher, we need to take out the 50, 62, and at the 62 we've got the 20 bar moving average there as well. In the 30-minute chart, that's not the 30, that's the 5-minute. In the 30-minute chart, we can see again how important the low was yesterday in the pre-market session, early hours. During the morning session in Europe, dragging the Dow off the low, and then 2:30 we see prices then continuing to move to the upside. Already through yesterday's high in the Dow and above the 5 bar moving average as well, so still holding at the moment despite the fact that we're down just a little. Look at the 5-minute chart, you can see that small move to the downside at the moment, but 30 minutes still looking rather bullish there, as is the daily. You just need to take out that resistance at the 50% area. In the German DAX, you can see this also moving high. Yesterday, the first green bar in numerous days. I'm not going to count them. You can see how many days there are that the market's closed below the 5 bar moving average. Demand on Friday obviously helping this market. Prices moving strongly to the upside yesterday, trading up to resistance of where the market sold off for those last 2 days last week. So let's have a look, see what we've got on the upside. We're at 50% at the moment, just like the Dow, and again 62% retracement there. 78 with the 20 bar moving average, and 89 with the 50 EMA there in the longer term. Let's just save this. The market looks strongly on the overnight as well. Have a look at the 30-minute for the DAX. You can see there prices coming off that low again yesterday. Amazing, isn't it, how often it does this? Not only did it come off it, but they retested with an 89% retracement there as well. I'll just draw that in for you from there to there. See the market coming back, and then it was straight up all day for the German DAX. The 5-minute charts, the futures kicked off, moving higher, and then when we got to the cash market, we had a sell. We sold off, we bought back, as you can see there. The momentum had already switched from being oversold. Shakeout, market comes back, there's that 89%, looking at it in a bit more detail. So from there to there, you'll see 78.89 there, and the BRN and the low, which is what you're looking for. All of these triggers coming in together, the confluence, and then the market just moving up all morning there, and then a bit of a pullback is when the Dow opened. Didn't take long before the market then continued to move to the upside, and then overnight we've seen the market gap higher and continue higher up as well. And we are above yesterday's high, so that could be support if we get a bit of a shakeout. It'd be a good shakeout as well. It's nearly 100 points, is 100 points down to that level. So yeah, fairly bullish for the markets. There's no major economic news this week either. I haven't done any trades. Well, I did 3 trades yesterday, 3 winners, small profits. I'm currently busy dealing with bereavement in the family, so that's why I haven't got any trades to show today. They were just very tiny profits, obviously due to distraction. Let's move on and have a look at the S&P. And in the S&P, you can see the markets doing exactly the same as the Dow and the DAX, moving up yesterday, overnight moving to the upside too. There's your yesterday's trades again, that low very important, and overnight the S&P is above the high. So we moved up, we've pulled back to the close, and then we've taken out yesterday's high for the S&P. In the daily charts for the FTSE, we're just above the 5-bar moving average. We have a sea of red here to the downside. This is the first time the market's, well, not traded above, but may hold above the 5-bar moving average. These are the upside targets for the fibs. Any move back to the upside, it's the Tory party conference. It depends how that's interpreted by the city to bring these numbers back there. But again, you can see you've got the averages, the 20 and the 50 EMA in the way of the 62 and 78. Again, a confluence of indicators there. The 30-minute charts, again, off the low, up, back, more of a double bottom there, 89-90% retracement and double bottom. We've got the 200 MA that got a bit sticky around this area. We came through, but then the market relented, came back. But overnight, we've gone back above this and above the high, with the averages all nicely spaced out there. So yeah, upside potential still remains in the FTSE. In the currencies, because of the potential of a pivot in May 2023, blimey, that's some time off, isn't it? The GBP and the pound dollar both moving to the upside, as you can see there, through 78%, through all of the averages yesterday, and heading back to where there was no issue in the market that we saw last week in the 30-minute GBP. Big move to the upside initially, taking out the high becoming a support, and that's where you want to look at today. If you do get the market coming back down towards the high, that will be very important, or any other pivots for that matter. So yeah, the yen moving strongly there, GBP yen, and the pound dollar moving through the 78.62 that we had as resistance on Friday. The market taking this out yesterday. We're also through 89. Which is drawn from here. There's a 189 there, that's where it is. 113 needs to get through this, and if it does, then we've got some more fib targets drawn from here, the next line up. So the one is drawn from here, that one back to here, and then the second one. So this gives you the area of where you can expect some resistance from a Fibonacci perspective should prices move higher. And you've got this 89 and 50 EMA as well there. In the 30-minute chart, also you're seeing this move yesterday to the upside very strongly to begin with. Bit of a pullback, and then finding support at the close, 20-bar moving average before moving back to the upside. And finally, the star performer of yesterday, which I haven't been able to say for nearly 2 years, or over 2 years, is silver. You can see there yesterday, massive move to the upside, up to nearly $21, up on the overnight. And all I would say is don't hold your breath, because they're likely to bring this back down. Moved up yesterday on the rumour of a Fed pivot, weakness in the dollar. As soon as you get the strength back, then this is going to come under pressure once more. Same for gold, not as big a move yesterday, which is why you saw the massive drop in the gold-silver ratio. And the 30-minute gold also coming off those lows yesterday and trading back to the upside. We did get above $1,700 an ounce. That's that red line on the chart there. But we're not holding there at the moment. They're keeping it below $1,700. The dollar for yesterday down, but not a huge amount. And certainly, if you look at the 30-minute chart, was just the one sort of shakeout that ignited the move in the silver market. And then finding support overnight. So will be interesting to see if the market can move to the upside in the US dollar, and if so, by how much back to the upside there. So it's just drawing a few lines. They would be the areas of resistance if the dollar does move back to the upside there. Okay, so that's a quick roundup of yesterday's market activity and what could possibly happen today. But as I always say, trade what you see, not what you think or expect to see. And that way you'll trade with the flow of the market. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.